Rightio, folks, welcome back to the Williams Real Estate channel. Today we are discussing all things houses. We also like buying houses. We've bought many houses. Personally, I've got a solid 10 houses in my own property portfolio. So houses are good. We'll run through the pros and cons and whether or not we're buying them in today's market. So stick around. Our criteria for buying houses are both on large blocks with development upside as well as smaller blocks. Both work well. Typically, we like buying the larger blocks, just like this one, where the house is situated to the front of the block, where there's good side access and a big backyard where a small development can be completed, such as a granny flat or subdividing it into two to create the second title, to do a battle axe block to build a second dwelling, as well as even 2 or 3 villas, just like next door. If you are active and you are looking to do a development, we will look for something like this, where a precedent has been set, meaning the next door neighbor, this is the original house, and at some stage the neighbors built these 2 villas down the back. So that's what we will look for, either in the same street or surrounding streets, to set a good precedent. So when you go to do your development application, you engage your town planner, architects, surveyor, to do all your plans up, to shoot into the local council to get approval, and also reference an address like this one next door to say, okay, well, that's a precedent being set. We want to build something similar to that. That's already been approved by the council, so it'll make it seamless as it can get to get the approval underway through council. So this is typical style of a larger block that we will look for, big blocks where you can add that second or third dwelling, or even knock it down and put 3 or 4 townhouses on the site. Typically, we buy the large blocks on fringes of towns, as well as we can look at them in the metro markets. We also do like to buy houses on smaller blocks, closer into town, closer to the main district, where they don't have the immediate upside in terms of development within the near term, 5, 10, 15 years. Who knows, maybe down the track, density may increase and you may be able to duplex the smaller blocks into smaller size dwellings. But we like both, depending how active you wish to be. So if you can see yourself being more an active investor where you can buy a property and do some value add to the site by way of development, then we can look at that. If not, that's fine. We also buy houses with no development upside. So both work well in a portfolio. Second to that is we like to buy brick and or weatherboard construction. Typically brick if you're going to set and forget and keep it for the long term, as they are lower maintenance type of construction. Weatherboards is fine, and predominantly we'll buy weatherboard if the site has the development upside, where the plan is to either knock it down, build 2 or 3 dwellings on the site, where yes, weatherboard will come with higher maintenance, but if the plan is to redevelop the site, then it doesn't really matter in terms of short-term higher maintenance costs for maintaining a weatherboard. But typically we like to stick to brick type of construction, low maintenance, solid as, resilient, gone through the test of times, no pools. So nothing sexy, nothing flash, just fundamental housing. The benefits of houses: stable growth. Some people say better capital growth. I don't believe so. They typically are pretty resilient and stable. Houses just tend to tick along. They don't go through drastic booms and busts like cycles, like individual units can do. They go through more of a boom bust volatile cycle. Houses tend to just tick along. They do go through their growth cycles, but then they plateau out and just stagnate for a while before then booming again. They don't go through as severe boom bust type of cycle. So they provide that stability to a portfolio. There's no owner's corporation. You own and control the whole site, so you have to be a little bit more hands-on. Something to think about when they're interstate. You won't have that luxury of a second layer of management, but it comes with less fees. So that's something to as a positive, but also can be a double-edged sword if you're getting into property investing for the first time. Houses are definitely more hands-on when you have to maintain the external facade of the building and also make sure that there's no, I guess, foul activities in the backyard, etc. So you don't have a owner's corporation managing the facility of the site. So something to consider, but yes, it comes with no fees. Full control of the site, so you're not tied into a complex with other owners. You own the whole site, you've got full control. So then you've got the ability to add value by renovations, additions, by adding a room or bathroom, or development, as you can build a second or third dwelling or knock it down and build a couple of townhouses on the site. Cons to consider: low rental yields as the purchase prices are slightly higher and the rents aren't really much stronger than individual unit villa townhouses. Think about from a renter's perspective, most tenants want low maintenance. So bigger block sizes with big maintenance, with gardens and lawns to maintain is less desirable for people that are looking to rent a house typically. So you'll find the rents aren't as much higher than individual unit villa townhouses. Hence, it comes with lower yields. Typically, we're finding now in the current market between that 5 to 6% gross rental yield. So that's lower relative to other assets. Higher maintenance costs as you're going to maintain the whole site, as well as a house, especially if it's weatherboard. The need to maintain the whole site. So these two facets, being lower yields and the higher maintenance cost of the site, comes with a restriction of borrowing power. The lower yields will restrict borrowing power because you'll have especially now with the high rates, a negative cash flow. So the banks factor in that with your serviceability, but then also the maintenance upkeep of the site. So the banks factor in a risk profile for major works. So say if the roof needed replacing, that could be a 70 to 80 grand bill on one owner. Whereas if you bought a unit or villa or townhouse in a block of 10 and the roof needed replacing, that could be a 150 grand job. But if it's shared across 10 owners, it's only a 15 grand risk. So you'll find your serviceability won't go as far with houses because of the lower yields, but also the higher risk profile the banks put in place when doing your serviceability in relation to major works and maintenance upkeep requirements of the site. You need more capital, obviously, because the higher purchase prices. We typically finding good deals between that 400 to 500,000 ish price point in the regions. If you're looking at metros, you're looking at minimum 600 to $1 million. So higher purchase price, bigger outlays. So something definitely to consider. Right now, current market, we're not typically buying them as actively as individual unit villa townhouses and blocks of apartments. The yields aren't there currently in the market because over the last 5 to 7 years, the prices of houses have shot up in the regions and in some of the metros, which has compressed the yields, which is a leading indicator for us for long, stagnant, flat market. So buyers beware. Houses are not the be all and end all. We like to diversify across multiple different types of dwelling types. So individual units, villas, townhouses, and houses and blocks of units. Houses are great, as we discussed, but at this stage of the cycle, they're not the best pick at this stage in 2026 and beyond. So buyers beware, and you'll find that the advocates that just stick to buying houses, or the people that just stick to buying houses, will find themselves running aground and becoming stuck because there's not one type of asset class that will always consistently outperform. Everything has its time in the sun. Hence why we like to diversify not only across metro and region, but we also like to diversify across types of properties. Houses are great. They'll eventually come good again in the future years ahead, but as of 2026 and on, not our top pick. Hope that helps. If you want help buying an investment property and building out your property portfolio, get in touch today. Until next time, catch you on the next one.